What's up, guys? Welcome to another episode of the DJ Radio podcast. I'm your host, Thiago Vilela, and today I had a great conversation with Haus, the founder and CEO of Pear Protocol. Pear is a pair trading platform where essentially you can long one asset and short the other in just one click. We went through all about Pear, also talks about DeFi innovation, trading, the markets. So let's jump into the episode. Hey, Hoof, welcome to the show, man. Thanks for coming. Can you introduce yourself? Talk how did you get into crypto and what motivated you to start Pair Protocol?
Amazing. And thank you for having me, Tiago. I've been a follower of yours and your content. So good to be able to connect with my Brazilian friends. So my own background is in trading. So I worked for an investment bank. I worked for Deutsche Bank for 10 years throughout my 20s. And there I was a volatility trader. So trading equity derivatives, meaning like call options and things like that on European indices. Then in about 2019, I had the opportunity to do some farming for some friends, some yield farming. I made it my kind of full-time thing. Ended up managing money in crypto for a few people. And through that, we were doing two kind of strategies. We were selling vol, which we're very comfortable with, and we were pair trading. And pair trading meaning we were running things like being long Atom, short Solana around the time of the FTX collapse. Or at the time of the merge, we were long ETH and short Ethereum Classic. And these kind of thematic pair trades where you're long one asset and short another at the same time, we liked them because they were kind of somewhat market neutral, right? You don't care if Bitcoin goes up or down. You just care that your narrative is correct. And especially throughout 2022, 2023, when the market was like just shitty, choppy, no trend, pair trading did very, very well. And so we realized firsthand there's a problem here with pair trading because you have to go to DYDX or Binance or somewhere like this, open individual longs, open individual shorts. I then have to go to TradingView and chart the pair somewhere. I then have to go to an Excel sheet and work out my net P&L and what my net funding is. And then I have to click buttons if I want to like have 5 pair trading positions. I have to click 10 different buttons, right? It's just a nightmare. And so that was really the genesis for building Pair, was us as a professional retail user is having this problem where we can't scalably pair trade. And so I was kind of getting bored of just trading. I'd been doing it for 15 years at that point. And so I was like, let's build a platform. Let's eat our own dog food, they say in some parts of the world. So we decided to eat our own dog food and build the platform.
Oh, that's great. It's very interesting because we have a lot of friction to do anything on chain actually, and CX in general are like good platforms. But doing what you guys are doing, like the execution risk, because if price moves fast, you kind of miss your trade, right? If you cannot do it in one click. So it is interesting to see founders that have a pain and like I gonna fix my pain in the market. And Peer's a very interesting protocol. It's a new primitive, let's say like that, for DeFi. And before we dive deep into Pair, I want to get your thoughts on the innovations in DeFi right now. We see a lot of people in Twitter complaining that there's nothing new happening in DeFi, and people it's just the same, and DeFi is kind of like moving too slow. But if you're in the trenches looking into stuff, there's a bunch of new cool experiments, cool protocols like Pair. So how do you see like the DeFi, the new protocols, the innovation happening in DeFi right now? Do you
Yeah.
think we're missing out something, or
I think we're just early with a lot of the product market fit. So DeFi is one term, right? And when people think of DeFi, they think of like a whole range of things from Olympus DAO and other kind of Time Wonderland and all these like Ponzi farms, essentially, right through to like basic stuff like Aave, just borrow and lend, through to more complex stuff, including real world assets or perp dexes, etc. Right. So I think first of all, when we refer to DeFi, we don't have like a common definition of what we mean by that, right? And so I like to use this term on-chain finance. And on-chain finance, we are seeing a lot of innovation, right? Tokenization of securities, tokenization of treasuries, sorry. I meant to say, we're seeing things like Hyperliquid bring a very scalable layer one for dedicated trading. You're seeing things like Pendle are doing with yield management and stuff like that. And then you're seeing Aave getting these integrations with like Trump Jr.'s project and these kind of things as well. And so I'd say we're a little bit just early in terms of the adoption curve for on-chain finance. I think the people that will use like layer twos or permissioned KYC layer twos for this on-chain finance, they're only just getting comfortable with the technology stack. But I can understand the argument that DeFi isn't innovating and isn't growing. I think there is innovation happening. It's just not in the like crazy 2021, 2022, here's your 1000% APR kind of unsustainable stuff, right? And that's where I think
Yeah.
people are a bit disillusioned is you can't make as much money as you used to be able to do in DeFi, but it doesn't mean that DeFi or on-chain finance is not growing underneath the surface.
Yeah, yeah, I agree with you. I think there is something that a lot of people that complain about it, they don't try stuff. They only look in the surface, so they don't like go down rabbit holes to find like new things. Although I agree that's not growing as fast, I think, as people believed would grow. Like at the beginning, we always like overreact in that our expectations, and then we go like through the Gartner hype cycle. We go peak of inflated expectations, and then it comes out, and then slow and steady growth. I think there's something to it and happening in DeFi right now, in on-chain finance. I like the term. In go moving with these niche protocols and stuff, you mentioned Pendle with the yield trading, and in Pendle they started and they didn't get a lot of traction until we get the points meta. And recently, the Battle Shares ETF for pair trading was just approved for traditional finance. And I saw a tweet of yours saying that a lot of VCs they didn't want to invest in the early days of pair because they thought it was too niche, although it is big in traditional finance. So, how do you see like this lack of like perception from things that has a huge potential but people don't see it? Did you get what I mean?
Yeah, I think so. So if I can recap, like 18 months ago, the pitch to a lot of the VCs was in TradFi, you have hedge funds mostly, but all sorts of institutional investors as well, pension schemes, etc., putting on some type of relative value trade, right? They're long one thing, they're short another thing, and they're making the spread in between. And in crypto, I think that the extension has been, well, it's only institutions doing it in TradFi, therefore it's only institutions doing it in crypto because retail is not pair trading in equities, right? They're not really going long Microsoft and short Google or something. And so I understand where they were coming from because there's no precedent. Like people on Robinhood, they're not pair trading, right? They're not doing this kind of thing. But what makes crypto unique is we have the tooling to enable someone to do this in a very permissionless, frictionless way, right? And that's the beauty of blockchain technology is if you're a hedge fund, right, you have to have like legal agreements with a bank, a credit agreement with a bank. You've got to have a long-standing relationship, lots of collateral, a prime brokerage account. Like there's minimum hurdle rates of hundreds of millions of dollars to be able to pair trade with a bank, which is where most of these things take place, right? Because they want leverage and funding and all this kind of stuff. But
Yeah.
on chain, you don't need all those barriers to entry. You just need a guy with a wallet and a decent enough tech stack to make that happen. And that's what Pair enables, right? And so for
Yeah.
me, the toughest bit about Pair isn't actually building the platform, which we've done. It's the content side. Like you can pair trade, you will make money in these scenarios, writing articles, creating videos, doing lots of stuff with the community to show that pair trading works in any market condition. And that's really the hard job. And I think the VCs turned us down because they basically said, like, I don't think you can do it. Right? I don't think you can build the platform and create the product market fit at the same time.
I got it. Yeah, I have some question for this educational part, but I wanna come back to this later. And back then, actually, VCs investing in infra was basically free money, right? And people didn't want to invest in apps. There's like they didn't want to take the risk. I think this impacted too, or you don't believe it?
I think so, for sure. Like when we spoke to a lot of VCs over the past year or two, they they definitely had less of a focus on DeFi, right? On DEXs and all this kind of stuff. And I think what's interesting now is a lot of the infrastructure play, which was basically, oh, we can launch this stuff at high FTV and like cash out because there's lots of demand, has not proved itself, right? So I think now there's been a changing tide a little bit with regards to just building infrastructure layers. I understand at the time why the VCs were hyper focused on it, but it's like that you have all these different layer ones, layer twos, all these different like data availability layers and stuff, and no one's that focused on the app layer and users. And I think the tide is shifting a little bit where people are looking at it the other way around and they're like, who is going to bring adoption, right? And this is why like Chain is interesting. I'm not an investor or any way affiliated, but they're hyper focused on the user side, not the tech side per se.
Yeah, yeah, I agree. So, man, coming back to the platform now, can you explain, like, for the listeners that they don't understand, like, how does pair works and like the protocols you build on top, and like how does it work in the on the where the user can see on the back end, like
Yeah,
how is
for sure.
like the pieces all plus pieced together?
For sure. So if I phrase this back as a question, right? If you were to build a exchange today, the biggest roadblock is liquidity, right? Sourcing liquidity,
Yeah.
meaning someone wants to come to your platform, they want to long an asset with leverage. You have to either have a GMX type model and have a liquidity pool that people trade against, or you have an order book like Vertex or Hyperliquid, where a market maker is adding two-way liquidity to the order book,
Hmm.
or you have an alternative way of getting liquidity, right? Um, and so for Pair, we looked at this problem and we were like, we don't want to be in the game of attracting liquidity because liquidity is already fragmented enough, right? Like a Hyperliquid, there's Vertex, there's GMX, there's like all this other
Yeah.
stuff. And so we said, okay, well, let's be liquidity agnostic. So we'll just build on top of other protocols, which are super secure in terms of like smart contracts, audits, and all the rest of it. They have deep liquidity and they've been around for a long time. They already have users. And so it was a conscious design choice to say, let's build Pair on top of these other venues. So our first integration was with GMX. The way that works is if you want to go long ETH BTC, we basically execute in the same transaction a long ETH position with leverage and a short Bitcoin position, and we tokenize that as one trade for the user, right? So on the front end, all the user sees is I'm long ETH BTC. This was my net entry level. This is how much funding I'm paying net. Like I'm paying funding on my long leg, receiving on my short leg. These were my execution costs, and I can close it again in one click, right? And the
Yeah.
chart is already made for you, ETH BTC, etc. Um, and so GMX had like an interesting universe of at the time 12, 13 different assets. So you could do like long link, short Bitcoin, long Uniswap, short ETH, like a couple of assets. And our users basically said we need more. We need more assets. So then we looked at Vertex. Now Vertex have an order book and they have like 10 plus market makers on there. And what that meant is we built on top of their SDK. And so now when we route an order, we route it through the Vertex order book. So you similar kind of concept. If you were long, let's say Aave and short compound, we would go into the order book, would market by, let's say $500 of Aave, we would short $500 of compound, we would tokenize that as one trade, and you would see long Aave comp, you would see the chart, you would see all the details there, right? So the final piece is how do you add even more assets than what's on Vertex? And that's where our most recent innovation has been with SIM to build an intent-based solver network for perps. That's a lot of words, but essentially what it means is, let's say you want to be long something like goat and short mood deng, so like meme coin versus meme coin with leverage. The solver on the other end can actually hedge that on Binance or Bybit or somewhere, right? And so now we're getting our liquidity in an OTC manner, meaning a solver is going off and hedging somewhere else and giving you the fill. And so coming back to this topic of on-chain finance, what have we created? It's a bit like an on-chain OTC desk where you get to execute anything you want as long as the solver can fulfill it, right? And that's where like liquidity becomes really, really powerful for users.
Yeah, I believe like a lot of people in a lot of people, a lot of things in the future will be built on top of intents, and the user experience is simply way better than doing like pushing some execution off chain. And regarding the intense integration, is you guys on Sim you have like 45 to 50 pairs, right?
Oh, way more.
Something
We
like
have
that.
270 something assets.
Oh,
So you can do like, if you think about all the different ways you can combine them, it's almost like 65,000
oh,
pairs.
oh, I thought it was a little bit less pairs, a lot. And so I don't know how like Sim works, but you have like so the solver network, and how many market makers do you guys have right now there?
Exactly. No, you described it perfectly. There's a solver network underneath, which is basically market makers fulfilling these
Mm,
orders. Right now, there's two market makers connected. They
mm,
hedge on Binance futures, and we're adding a
mm,
third who can hedge on Bybit. So we
mm.
have even more underlyings potentially available because Bybit list assets faster
Yeah.
than even Binance do, and they have way more.
Yeah. All right. So I got it. And right now, the GMX with the like the liquidity pool and the order book in Vertex, do you guys plan to take this part out in the future and keep only intents, or are you pretending to leave these functions over there with the like the isolated and cross margin separated stuff?
Yeah. We are liquidity agnostic, meaning we'll retain all the execution venues that we have and we'll add more over time. So our next integration is with Hyperliquid. And
Oh.
essentially what we mean by this, right, is we know that there are people who want to trade on GMX and they just use Pair as the front end for their ETH BTC trades, right? But they're loyal to GMX. They're part of the GMX community. They want GMX to accrue fees. They trust GMX contracts. It's fully like on chain. The same thing with Vertex, right? Like there are Vertex users who like Vertex. They still want to accrue their Vertex rewards and things, and they can still pair trade with Pair as their front end. And we get a lot of support, and we love the Vertex team, and the cross margining engine is very very good there. Um, and then with the sim guys, obviously that's where a lot of our volume is taking place. We do want to innovate that product and add new features and make that our kind of
Mm.
stellar
Yeah.
product. So that's the way we kind of think about it. We don't have a favorite. It's really up to a user. And with Hyperliquid, what's interesting is there are people pair trading on Hyperliquid, right? Antita is famous for running a pair trading vault, and he's one of the most successful traders on Hyperliquid. But if he can route his orders still through Hyperliquid, still get all his points and everything, but just do it on the front end for Pair, then it's win-win for everybody. It's good for Hyperliquid, they get more volume. It's good for Pair, we get to take a little cut. It's good for the user, they get a better UI and UX. And essentially, that's like our whole philosophy here is how do we create win-win, not compete.
Oh, great, man, great. Yeah, that's interesting. I was going to ask you if you guys are integrating Hyperliquid, and do you guys plan to expand to other chains? So, how hard is for you? Like, if you let's say Bera launches next month, and Hyperliquid's gonna go to this open their own Hyper EVM chain. So how hard for you guys to plug into other chains like Bera, Monad? Do you guys have plans to deploy in these like more trading specialized chains in the future?
Absolutely. We can go wherever our liquidity partners are.
Mm,
So, especially with regards to the likes of Vertex or Sim, wherever they deploy their liquidity, whether it's on Mantle, whether it's on Say, whether it's on Base, whether it's on Bearer, we can be there. and build a front end on top of that. So for us, I think the next integration is definitely a focus to get on Hyperliquid, and
Great.
complete that. And then afterwards, essentially, we'll be wherever users need us to be.
Oh, great! And it is a nice approach that you guys don't actually have competition. And if you keeps like aggregating like this, it's probably not gonna have another pair trading like front end. I'm gonna call it like that. No, it's more complex in it, but we're not gonna have it another one because Hyperliquid wouldn't be interested in building like this if they can just route to through you guys, right? Do you have you heard about any other teams building something like what you guys are building?
Yeah, I mean, as a builder, I never want to get complacent. I never want to feel
For sure.
like there's no competition. Competition is healthy. It's welcome. It's good for business, right? Sometimes,
Yeah.
like, to have somebody to keep you accountable, and to
And
push the boundaries
push
of what you're
you.
capable of.
Yeah.
But having said that, right now our experience has been GMX, Vertex, the market makers at Sim, and even Hyperliquid. They don't see us as competition. They see us as a way to drive more volume to them. Especially what you find is their business models are very pro-cyclical, right? So when the market is going up, they do lots of volume, lots of fees, right? When the market is going down, there's lots of liquidations, they take fees, but users get hurt. But 90% of the time, crypto is just range bound, right? And it's just narrative trading, like, oh, this AI is going to outperform XRP, or this meme coin is going to outperform the other, right? And in
Yeah.
those scenarios, 90% of the time where there's no clear trade, there is a clear pair trade. And so we are a massive diversifier for where these platforms get their revenues from during quieter periods, because chop is almost some of the best time to be pair trading.
Yeah. Yeah. That makes sense actually. And that's very interesting. And these guys can you see in the vaults, like the vaults usually do like 100% APR when the market is like is going up, and like 10% APR when it's chopping. And very good, man, very good. Do you guys have any like new features to release in the upcoming like weeks to months, as like take profits, stop orders, this kind of stuff?
Yeah, absolutely. So I think the biggest thing that's missing from Pair is we haven't yet got huge whales on the platform. People who are doing like half a million, $1 million trades, right? And the reason why we haven't got them is for two things. Right now, we don't have take profit and stop loss because of a simple reason, which I can go into in a second. And number two is we don't have all the fee rebates and fee discounts that you get on other trading platforms based on how much staked pair you have or based on your monthly volume. So the second one of those problems we're solving in the next 2 weeks, which means that you'll be able to, the more you trade on pair, the bigger your discounts, the bigger your rebates. And so the cost of trading on pair is going to collapse, right? For the bigger whales. It'll be very competitive. But take profit and stop loss is really hard in pair trading because there's multiple ways for, let's say, Bitcoin ETH to go from 25 to 30 as a spread, right? It could go from
Mm-hmm.
25 to 30 because Bitcoin is flat and ETH has gone down, or because Bitcoin's doubled and ETH hasn't gone up as much, or both assets could have gone down, right? So
Yes.
where do you put your limit order on individual legs? It's an impossible
Yeah.
problem. We've solved
Yeah,
it,
it's true.
and we've solved it, and we are just like testing it right now. I'm really impressed with the way that the team have gone about it. It includes like building bots for relative price between two assets. It involves a lot of work with our market maker. It involves a lot of like new scripts, but I think we've solved that. So that's going to be the next big product push, is take profit and stop loss.
Oh, that's very interesting to hear. I haven't thought about it, but yeah, it makes sense. Like it's impossible to predict like where my to put my orders and where it's gonna execute it. It's yeah, it's basically impossible. Do you guys have this on testnet right now? Testnet, right?
The take profit and stop loss, or
Yeah, the take profit and stop loss.
we are testing internally. It's not on a test net.
Oh, all right. Well, that's interesting. I'm curious to see this working. And all right, man. Regarding the let's coming back to the educational part that you guys that you told me earlier. you just launched a campaign like to for people to trade and like get 500 bucks in the account, and this is very different than what we are used to in the market right now. The people are like most like projects, they have like KOL rounds, or they pay KOLs to shoot the product and like or talk about the product and get like awareness. You guys are going through to a different route as doing these campaigns, and you guys are writing articles, doing videos. And how like more effective do you think like this can be, and how the educational process, how hard is for you guys to be like building the platform and doing the educational stuff to get people to know better about pair trading?
Yeah. So I think the reason why people haven't taken this approach is because it's harder, right? It's so much easier to like send some ETH and some free tokens essentially from your treasury to a KOL and say, "Hey, can you put some tweets up?" Right? What happens is your token price gets a bit of short-term appreciation. You might win some traders, and then the KOL dumps the token, and usually they're like bad traders because they're like blindly following some copy
Yeah.
trading, sorry, some KOL, and so they're going to lose money trading as well, right? They're not the best. Um, and so we decided to build our educational content. We decided to reward the community, so give the community like a thread competition to actually just pay people in the community for writing the best threads. Or more recently, we're going to fund 10 accounts with $500 each, as long as you just share your pair trading setups. And for us, the reason for doing that is we want to build an ecosystem of traders, right? People who really share ideas and thought process and things like that, because the whole of crypto leverage trading is designed for you to lose money. It's designed for you to use high leverage, pay lots of funding, and get liquidated. This is the business model of the market makers. It's the business model of the centralized exchanges. And that there's only maybe a handful of people that really, really make any meaningful money on this, right? So
Yeah.
pair trading is different. In pair trading, we are the only platform I know of where our users are net profitable. They make money, right? So then how do you create an ecosystem of traders where they are all making money? Well, you've got to have multiple people all sharing ideas, charts, information about token unlocks, writing threads, running their own trading challenges, etc. And so that's what we're really trying to foster is we have the product where people quantifiably can make money and have been over the past few months. And then you have the education that we do, which is articles and videos to complement that. And then the final piece is community. Like, how do you get traders who are only learning about pair trading to really like share all their knowledge and insight? You put them all in the same room together, and that's what we kind of want to do. And it's a small cost at the end of the day. Like 5K is a day of fees for us, right? Give it back to the community.
Yeah, it makes sense. It's a good approach. Take the hard path, and like it's a long term approach, right? And very interesting. I haven't seen like the thread competition. It's cool. There's some decent threads in Portuguese. Like a friend of mine did one recently. It was a nice thread teaching people how to use pair. And regarding the token, you say you make like 5K a day in fees, something around that. You share like 90 grand already, 90.8K. I have like the dashboard open right now, in fees in like 40 days live, or the staking,
Yeah.
or a month.
Staking's been live just for about a month. Yeah.
A month. Yeah, so it's 90K. It's almost like 3K a day in fees distributed to token holders. You built like an interesting tokenomics for pair, with like it's 80% revenue share and 20% to the DAO, right?
Mhm.
And people can stake pair. Like back in the 1,000% APR era, we didn't have a lot of good tokenomics, especially for DeFi protocols. People were like afraid to do revenue sharing, or they didn't want to do because they wanted to reinvest in growth. I saw like some proposals in Lido, and the people that voted no said no, they should be reinvesting it in the protocol's growth, and then thinking about like share like dividends. And like, how did you come to? Can you explain like for the audience how's like a peer token flywheel right now, and why did you choose like to go this way?
Yeah, for sure. So essentially, it's about decentralizing the project over time, right? The the team all at Pair are genuine believers that the best way to build something like this is you bootstrap it, you do all the development work, but over time, it should be a decentralized project run by a DAO for the token holders. And so, how best to create that vested interest is you launch a token and you physically have people with that are stakeholders, right? Like they buy your token, they stake it, and they receive like 80% of the protocol fees. And so we made staked pair at the heart of our ecosystem, meaning, yes, you get the revenue share, right? But also you get some other things based on how much staked pair you have, sorry, you can have fee discounts on your trading. And we took a lot of inspiration from GMX there, which was this idea that not only do you have a platform and a token, but you have like around the token an entire ecosystem, right? And
Yeah.
so we built it in a very simple manner, like no convoluted tokenomics, which are tough to explain with like rebase factors and all this shit. What we did add was an exit fee penalty, which meant that if you are a tourist and you basically come and you're like, oh yeah, I'll stake, you, and then oh, I'm gonna unstake, right? You pay a fee, like you pay 20% of all your pay you give up, right? And those tokens go to the loyal holders that have been holding, right, on a pro rata basis. And again, it's to create loyal stakers. If you think about it from a tokenomics perspective, what does that do? It reduces circulating market cap, so it gives the token room to breathe. And so, really, then what have you done? You've created this balance between like traders that get fee discounts, a chart that goes up because circulating supply is low, stakers that are really happy with their APY, tourists that come and try it out, or they're airdrop farmers and they leave that benefit everyone else that's there. And just this like sustainable environment, because you talked about the crazy APY farms. It's not sustainable, right? It's hype and it's great. Whereas the way we've kind of designed everything is with like a 5 year horizon. Like 5 years from now, when all the unlocks have done and all the airdrops and all everything else, have you created a world where like everyone who's been part of that journey over the 3 to 5 years is happy?
Yeah, it makes sense. Even when you don't like look at to the thousand APR stuff, you go to the useless governance token, and yeah, the charge comes like as the unlocks go, the charge goes down, down only, and some people get happy and some people get mad. So it is an interesting approach, and this the decent flywheel for stakers and like for token holders. It's equity like, right? I don't know if you could be saying that, but
Yeah,
something like
I
that.
think that's a fair way of describing it. Yeah.
Yeah. All right, man. That's a very solid tokenomics, and a lot of like new DeFi protocols are like building models similar to it or with some heritage from the GMX model. I think they really kickstarted this movement of like revenue sharing stuff. And man, now moving from the on-chain markets, on-chain finance, comparing to CXs. Right now, over like 95% of the trading, derivatives trading volume happens in centralized exchanges. And how do you think we, as in the on-chain finance, can get to the same experience as centralized exchange in the future?
So that number's been static, right? Like
Yeah.
95 to 98% of all futures volume is done on sexes. And it didn't change even after FTX when there was this huge like call towards self-custody. It didn't happen when
Mhm.
Binance was being investigated by the DOJ and people were pulling out billions and billions of dollars. So you have to look at like structurally, why is 95% of all futures volume taking place on a sex, right? Now, there's a couple of things. Number one, some of it, in fact, a large part of it is wash trading, right? These platforms are wash trading. And I know very well that like market makers, for example, they'll have a sub account on behalf of a project with a high frequency trading account just to ensure that enough volume is happening to keep that token listed, right? Dexes don't
Mhm.
have those kind of arrangements, for example, right?
Yeah.
Then you've got market makers who want to keep their VIP tier, so they want to do a certain amount of volume on the platform, right? Again, they're wash trading to
Mhm.
get that done. So I think when people are comparing this number, they're comparing apples and oranges, right? Two different things. Because Dex volume is steadily on the rise, like especially with stuff like Hyperliquid.
Yeah.
Um, and I think the ratio is actually the wrong metric to look at because you have different games at play, right? The centralized exchanges are in the game of working with projects and market makers to get tokens listed so that they can take a listing fee, so that the projects can cash out and do some treasury management, so the market makers can like run some wash trading on their behalf, and so like some kind of whoever it is just opening and closing trades very regularly on these platforms, and they want to do it, right? They want to say, "Oh, we're number 5," and yet what you see is like a load of USDC, USDT trading, right? They don't care. Like it's leveraged stablecoin farming of volume. So
Mhm.
the dexes don't need to look at that number to compete. They should just build superior technology, which the sexes don't do. And so for me, what pair is it's not trying to compete with a sex. It's doing something that a sex just doesn't do. Like if you want to pair trade in the most efficient UI UX friendly manner, Pair is the only place to do that, right? And I don't think
Yeah.
enough founders and teams attack the sex problem from that angle. They're like, I need to build a sex on chain. That's what everyone thinks, right? But
Yeah.
ultimately, what you need to actually do is think what bits of a sex can you do uniquely on chain that a sex just doesn't want to do, right? And pair trading is just one. Like I encourage you to look at so many different things that you could potentially do in this space. And that's why like pump.fun and all this shit does well because a sex isn't going to do that for regulatory reasons,
Yeah.
right? If you can find an angle that people want to do, which is essentially they want to gamble on the crypto markets, if you can find a way to do that, you will win market share from sexes.
Yeah, that's an interesting point of view. Like I'm not a like derivatives trading, so I haven't thought about it, the wash trading stuff. And do you have an idea, I guess, on like what's the true difference between the volume on CX and DEX? I just got curious now.
Honestly, no, I haven't had time to look at it. Um,
Yeah.
but definitely like Bybit, Binance, Futures, all these places, they're doing like 10, 20 times natural the volume uh,
Yeah.
on any given day than certain dexes, right? But even dexes are having being airdrop farmed, right? Like
Yeah.
Hyperliquid's volume, for example, it's being airdrop farmed. So you're comparing apples and oranges and two very different things. I think if you stripped it all away, how much genuine flow is taking place on dexes versus sexes, I think the ratio is like 5 to 1.
Got it. Yeah, it's a decent ratio. And regarding what you said, like building different stuff, I think this is the all the protocols that like took off. They they started something new. Nobody wants to try like the 10th, the 1,000th Uniswap fork, or like the compound V2 fork. Like that's like hundreds of them. Nobody wants
Mm.
to play in right now. And you do you have any primitives in mind besides the pair trading that we could build on chain and we couldn't do it in the CX cannot replicate it?
Yeah, I mean, pair trading is like one of the first things that we want to do. I'd encourage anyone to look into like the AI ML space, right? Like, how can you integrate all this data and analytics that is out there and then create an execution environment for it, whether it's Telegram alerts, whether it's like an LLM to like have a natural kind of conversation about I want to be long Doge and I want to short, what should I short against it, right? Like I can't give you all the answers, but I can say that the sexes are not really innovating. Like
Yeah.
if I look at Binance and Bybit and all this shit, what they're doing is they're adding loads of marketing fluff, right? Oh, we've got copy trading vaults, we've got this leaderboard competition, we've got this new listing of some meme coin. But from a product and tech perspective, there's not much innovation. And so if you're a genuine builder, I would look at these places like, okay, they have relatively low innovation thresholds to build new stuff. They're too comfortable with their existing business model, which is like list and charge listing fees and list anything. You can build superior trading experiences for a user. Just think like a user yourself. What would you like to see, right? Like me, for example, I would love an environment where I can go in and like it's like Bloomberg of crypto, right? There's someone hosting a show all day long and they're talking about crypto prices and then have some like other kind of alerts going off all over the place and all this on one terminal that I can execute on, right? And in Silico is probably the best example of someone who built something on top of sexes, which a sex will never do. They'll never give you access to trading from multiple trading accounts, right? With VWAP, TWAP execution. So think like a trader and build like a dev.
Oh, that's yeah, that's a true alpha for people that's want to build something and don't know where to start. And man, do you still trade actively, or Paris taking all your time right now?
I don't sleep much, man. We've just had a baby girl as well, but
Oh, congrats!
thanks, man. I am running a public challenge where I'm like doing 10K, running it up, pair trading on pair. So that's on Telegram. I think that is probably as active as I want to be right now whilst building pair. I do my own trading, but it's very swing trading, right? Like if the market is having 10% down day, I'll have alerts on trading view and I'll TWAP execution in to a long, right?
Um,
And if the market is getting frothy and everyone's in the all-time high waiting room, I'm like, oh, great, I can just average into selling some call options here. Like I trade at the extremes and I don't have the time to trade in between.
Oh, got it. Yeah, I mean, baby girl, start building startup, the podcast, trading. You're doing a lot of stuff, and yeah.
Thanks,
So
man.
now it's more like a personal question. As like you clearly have a very like good view into the markets and to narratives, and what are you finding interesting right now with like the market structure right now? Are you looking into something? Where do you think are we going?
Yeah, so I've said this a few times on like my trading channel and in Discord and less so on Twitter, but the buyer profile of meme coins has changed. And it used to be the case that even up till like a year ago, the person buying meme coins was like a retail guy with a phantom wallet, right? And you saw the phantom
Mm,
screenshots. Or it was like some dude who was just going to throw like zero point 0.1 ETH on something on Uniswap. Now, what's happened is everybody across the curve, whether it's like professional retail like me, or whether it's like liquid token funds, or whether it's more like sophisticated crypto shops, they're all looking at the meme coin space and they're all like, okay, this is like the best way to make money in crypto. If you can like, it's the highest beta way of making money in crypto. And so
mhm.
for me, what's interesting is that you see more and more of these meme coins launch, but they get to like a couple of 100 million very quickly, market cap, right? It used to be the case that a meme coin would have to be around for like months and months and months to like show to get to 100 million. And so I think what's
Yeah.
changed in market structure is the buyer profile of a lot of these meme coins. I was on calls like 6 months ago where some very serious people were talking about buying the Trump token. And now it's like common, right? Like, of course you'd
Yeah.
buy the Trump token, right? It's a politify bet. And so I think you'll see more and more of this um, happening over time. What it does is it sucks liquidity from like high FDV, other token listing, infrastructure layer projects, and
Yeah.
all of this. And then it becomes a vicious cycle, right? Where the VCs don't want to fund that stuff. The market makers and the exchanges don't want to list it anymore because it's bad for their users. And so then they get in the game of meme coins. And so everything like starts becoming a snowball. So I think Murad has uh some like 70% of what he says in his talk and his presentations I agree with. And I think the missing piece is that you have like huge pools of capital, market makers, centralized exchanges, liquid token funds, all participating in the meme coin game. So structurally, it's really changed, right? So for Pair, we're
Yeah.
leaning into that meta a little bit just meme coin versus meme coin. Like, okay, newly listed Nero versus Nero ETH, or Goat versus Mudang, or whatever, right? Just pair trade these
yeah,
narratives in very short term.
yeah,
Whereas it used to be the case of building a thesis of, oh, I want to be long Pith and short Link, right? We still
yeah.
have those users, but like the meme coin stuff just does 10x the volume.
Damn. Yeah, the meme coins frenzy is it's like everything's crazy. I think in this AI, I wasn't ever into meme coins. Like I just feel I don't have any edge, like trading animal coins. And when the gold thing started, I was like I felt like very intrigued into like the AI stuff, and I started to trading slash gambling a little bit on the memes, and a bunch of like other mid curvers came to start trading these two. And like I think most like 99% of like the participants in general, they're trading this stuff and looking to the stuff. Something we never I wouldn't imagine in like 2 years ago see like funds like trying to ape some hypo coin in like 50 million market cap, something like that. um
Yeah, and I don't know whether it's a net good for the space or not, because part of me makes me think that it's very like last cycle kind of behavior, right? Like one last throw of the dice, I'm going to go to the highest volatility game in the casino, but on my way out, basically. But I don't know, man. Like crypto has this anti-fragility to it. It has like core believers. It's got the Bitcoin ETF. There's enough there to keep people around. It's just a structural change, right? The other thing is like
yeah,
Bitcoin dominance. Bitcoin is the asset to own in this space. And one thing I would encourage anyone who's thinking about trading or wants my advice on trading is the end goal is always to have as much Bitcoin as possible, right? Like never lose sight of that, because that in 10, 20, 30 years, I speak like as a father now, that's the asset you want to own. And you don't want to own
yeah,
fucking dog shit frog that was launched yesterday. Just use it as a means to get long-term wealth for you and your family.
yeah. That's a great alpha. I used to be in Nif Maxi last cycle, and yeah, I've a lot of people ran into this. I just like I started to dive deep into the market in 2020, and like used to like follow Bankless a lot, and I became like an Nif Maxi for like 2020 and 2021. And I for a long time I didn't own any BTC, and then I like it changed my my mind a little bit. I came back to reality. And when you said like about less the people think playing this as this is the last game, I think a lot of people believes it's actually like the last time like retail can like change their lives do trading crypto, because with the TradFi coming with the ETFs and the markets get bigger, and we're not gonna have like these crazy swings that we used to have. So I believe people were like trying to hyper gamble their way into success, into making it. And I think that's plays a lot in the growth of the meme coin space.
Yeah, I definitely think so. I think GCR has this whole thesis, right, about a decentralized casino. Like
Yeah,
people of a certain age, let's say like Gen Z and millennials, they don't want to go in a casino and play on a roulette machine, right? They see it as like a dirty, seedy place full of like older people, people not very well dressed, they haven't slept, they haven't shaved, right? But sitting in your bedroom on your phone, gambling on some funny meme, like it's a completely different way of having the casino experience, one of the oldest industries alive, right? Prostitution and gambling.
yeah,
It's a way of
yeah.
it's a way of tapping into one of the most human industries that's been
Instinct.
there for thousands of years.
Yeah, yeah. I completely agree with you. And man, just two final questions that I ask in the end of every episode. The first one is, w- can you give an alpha to? You just said gave a bunch of alpha to people, but one more. It doesn't need to be regarding pair. It doesn't need to be like regarding anything in the market right now. It can be anything like related to building, trading, anything you want to say, and
Yeah,
an alpha for the guests, for the listeners.
yeah. I speak as somebody who has made money every year in crypto, trading crypto, right? Which is you want to buy liquidations because generally speaking in crypto there's not that many spot buyers on any given day, right? There's not this huge pool of capital that wake up and think, oh, today I'm going to buy a little bit of link, right, in spot. Unlike in the equity markets where every day people are earning salary and they're paying into like an investment pot somewhere, right, where there's a structural bid for like stocks, right? So what crypto is it's a massive game of perpetual leverage. And if you can see where the leverage is and use, like, you can use free tools like velo data to see open interest rising. Crypto has become this game where if you use a combination of velo data for open interest and funding rates to see if stuff is getting elevated, and then you look at stuff like Binance liquidation tape, just this Telegram bot, those two simple free two things that are free. All you want to do is buy when people get liquidated, and you want to short when shorts are getting liquidated, right? And patience is the best thing. Like, I get to be busy because I have a daughter and because I'm building a business. I have my alerts on my phone, but just buy liquidations, trade at the extremes. Like, do not need to put on a trade every day, right? Sometimes you make one trade in a month and that's it. Your month's done. Go and like touch some grass. So that's my like biggest alpha that I've learned personally is the less you trade, the more you make. Just set your alerts, have your own system. And when you have your own system, like I just described, right? Super simple, Velo data, Telegram, Binance liquidations bot, and the Bybit one as well. Then you have a lot more confidence because you're not venting your conviction from, oh, Blunt's contractor said this chart is going up, so I want to go up. Oh, why is it going down? Is he still in the position? I don't know. Should I close? Oh shit, I just got no, man. Have your own fucking system. Sorry for swearing, and stick to it.
That's okay.
And that's
Man,
like my biggest alpha is I see so many people in this space just scrolling Twitter all day long, or they in my DMs, or they're on Discord and they're like, hey, what are you doing? Are you still in this trade? Blah blah blah. And I'm like, dude, just study for 2-3 months
man,
and do less trading.
yeah, that's a great alpha. Actually, people don't want to study. People just want to be told what they do to do. It's like I think it's human nature, the same as gambling. But dude, this is a great alpha. I'm not a derivative trader where I look a lot into open interest and funding rates because like 99% of the time there is like a clear signal. And dude, the other question is uh you cannot say pair trading. And how do you describe pair in one sentence?
Pair trading is oh good. Pair trading is trading a narrative whilst you can sleep with less risk.
Oh, that's a good. I like it. I liked it. And man, thanks very much for coming. It was a great conversation. Um, Learned a lot in this conversation from you. And do you have any final words?
No, just a big shout out to the Brazilian community who've been big supporters of Pair and trading on Pair. They've been big supporters and have been talking about Pair on Twitter. And so just super grateful to all my new Brazilian friends. Always happy to be contacted on Twitter. I think yourself, Tiago, you just hit me up in DM and we got chatting. So for genuine people who are not trying to send me some scam link, I have lots of time, always to chat.
That's great, man. Thanks. It's shout out to Pair Troop in Brazilian City. Thanks, Huff. It's a great conversation, man.
Amazing. Thank you so much, Tiago. You're a great host.